Helen, could you please briefly outline the development of securitization products in China?
Sure. There are two securitization frameworks in China. The first one is called the Credit Asset Securitization Scheme, which is regulated by the People's Bank of China as well as the China Banking Regulatory Commission. It's used by the banks and auto finance company to securitize their assets. The second framework is called a Specific Asset Management Program, SAMP, and is regulated by the Chinese Securities Regulatory Commission. It's originated by corporates. The securitization market was last active in 2008, but came to a halt after the global credit crisis. The Chinese authorities just relaunched the pilot program under CAS last year and extended the eligible assets to include SME loans, and the eligible investors include insurance companies and investment funds.
To go on with that point, how do you find regulators see the securitization business?
The regulators definitely see the potential of securitization to provide liquidity in the financial system, to offload credit risk of their securitization originators and provide more room for lending. However, the government is still cautious about the pace of the development of the securitization market. It wants it to develop at a steady pace, but at the same time, the risks are being addressed and under control. One thing to note is that the State Council just announced some measures after its executive meeting in late August. And these measures are expected to provide liquidity for securitization products to broaden the investor base and increase the investor confidence. But one important thing to note is that these measures also signify our intensifying commitment of the Chinese government to further develop the securitization market.
So what are the key credit challenges for Chinese securitization?
There are two key credit challenges of the Chinese securitization. One is the legal uncertainty of the transactions under the Specific Asset Management Program. This is due to a lack of comprehensive rules around the transfer of asset titles in these transactions. So true sale and bankruptcy remoteness are yet to be tested under these transactions. And the second challenge is the lack of data. A long history of portfolio data that is usually required in securitization is sometimes not available. A substitute to that would be market data, but market data is largely unavailable in China because the market participants do not share data and do not publicly disclose the data. And on top of that, China just experienced over 30 years of continued economic growth. So data is reported under a continuously benign economy, which does not cover a stressful period. So in our view, this kind of data would provide limited insight into future performance, especially under economic downturn.
For the issuers, what can they do to get ready for the new business?
The issuer should expect that standards in securitizations can be higher than what Chinese companies would normally adopt. We expect that issuers should apply centralized underwriting policies, which are applied throughout the entire organization. They should have vigorous monitoring, servicing, collection procedures in place, as well as robust technological platform and operation risk management to facilitate the monitoring and servicing of these receivables.